Hi, everyone. I'm Lisa Durant, the president of Lion's Eye Wealth. Lion's Eye Wealth is a wealth management firm seated in Colorado. We serve clients throughout Colorado and the United States. Today, I'm really excited to have Mike Puck on from ZEGA Financial. We've done a few podcast interviews on alternative investments, and this is yet another um, topic, another investment strategy that falls within alternative investments that we're really keen on at Lions Eye Wealth. And Mike has just been so great in always helping me and in turn helping my clients to understand the strategies. They do quite a bit of option strategies, which some get a bit jumpy about, thinking they're complicated or hard. Mike is always there to help explain, and get on a call with the client, and really make sure people are comfortable with the investment if they proceed. So with that, I'd like to introduce Mike officially. And Mike, if you could just tell us a bit about your background and what led you into finance and maybe what you love the most about your job.
Sure. Yeah. So, hi, Lisa. Good morning. Thanks for having me. Um, Excited to be here. So, I've been in the industry now coming on, I guess, 15, 16 years. I got my start in New York. I worked as a trader on the NYMEX. So I used to actually trade crude oil options and derivatives on the floor. So I started as a trader back in 2007, 2008. Went through that financial crisis. Built my career as a financial advisor in some aspects with a number of the big banks, Morgan Stanley, TD Ameritrade, and then came over to become a sub-advisor, or basically an asset manager for advisors like yourself. And so I've done that now for about 6 or 7 years, and I work with advisors, and when it comes to financial planning or providing solutions. Like you mentioned, we are an alternative shop, so we're going to talk a lot about alternatives today. And we look for kind of different angles on the market than your traditional stock and bond portfolios. I think what I really enjoy is helping people with my career. I felt the way to do that, to get to the most people, would be to be a money manager and a sub advisor. So I work with you, and you work with 100 clients, right? So if I can work with 100 advisors, I can work with 1,000 people ultimately. So that's the goal. Is we're here to provide really interesting and new solutions to the market that I think is constantly changing for advisors and their clients. So we think we give advisors a real edge in something different than most traditional portfolios.
Absolutely. I feel really strongly that you'll help and answer questions, as I need and clients need, and give a lot of support. And I also won't forget that when I first started having clients invest with you, Jay got on the phone and called me and said, "Hey, is everything okay? And are you happy?" And I just, love the personal touch. Finance sometimes can be, um, a little scary, intimidating, and think it's just numbers. But really, at the end of the day, it's about people connecting, and really appreciate the support you all have always given me. So I wonder with that, if you could just talk a bit about ZEGA Financial, the firm, and then let's go into maybe how you see alternative investments as part of a diversified portfolio.
Sure, sure. So, yeah, the Zega Financial we're a sub advisor only, and what that means to your clients is that we don't work with individual clients, right? If we got a phone call from somebody directly that's not a financial advisor, usually we'd say no to that business, because we only work with financial advisors and a sub advisor capacity. We manage about $650 million. And that's about a mid-size investment management firm, right? We're not too big, and we're not too small. So we're still kind of small enough to be nimble if we need to, but we're big enough to really have a number of different strategies for advisors like yourself. We've been around now for 12 years. and I'm a director of business development for our firm. And so, we have a great team of people. We have about 10 people that work with us now. We have a trading team in Omaha and a marketing team in Boston, and I run sales and strategy down here in Miami. So we're kind of spread out. We all kind of work from home in this new, post-COVID environment, right? Where we don't have we do have an office, but not everybody goes there. So we are spread out. But yeah, so like I said, we're a mid-sized firm, and with a number of advisors that we work with around the country. I think that ZEGA provides a lot of value to advisors as well when it comes to the alternative space. And you'll probably hear me say this a number of times throughout the conversation is, I think with the interest rate environment where it is today with rising rates, that's creating a lot of problems or a lot of dynamics to the market that people haven't seen before. Whether that's bond portfolios, which are supposed to be stable, those are down this year, or its stocks really experience a lot of volatility. So because of those different dynamics that are happening to the market, alternative investments really is a new place to go and invest to try to be profitable or try to generate income in this kind of new world that we're navigating in, right? Interest rates have remained really low for a long time, almost 20 years now, right? The last time rates were, up 4, 5, 6% was in the, late 90s, 98, 99, 2000. And since then, we've really been on a downward trajectory. So because of that, that's creating this new dynamic that's hard to navigate. And alternative investments really, they can either provide you income in a volatile market, or they can provide protection if the market really drops. So there's a couple different solutions for them. We are an options firm, and we use options quite a bit. And a lot of clients actually think of options as very aggressive. And you can use them in an aggressive nature, but we actually use them to be very protective. So you can use them for multiple different reasons. But for us, we're trying to look at alternatives as a new space for clients to invest in that will again, help them navigate this new interest rate environment that we're in.
Mhm. Absolutely. That is the challenge. And this year, especially, has been a challenging year. So I wonder if you could explain about some of your options strategy, and then you have a new dividend strategy. If you could just give the audience a bit of background on the strategies. I think audience might think, why are we doing this interview if Mike and team works with financial advisors? And the real reason is because as a firm, we are very keen on education and information. And, even as is, clients of mine that are in these strategies want to know more and how the strategies actually work. So that's why we're doing this. So audience, you can really understand more about options, the landscape, and what is possible. And like Mike just said, sort of debunk this idea that options are only very aggressive and for the higher risk client or investor. So Mike, if you could just talk about the different strategies, that would be great.
Yeah. So there's really two lines of business that we work in for clients, and the names are for one is protected growth, right? So that's a major line of business for us, and it is some level of protection with some level of growth. And what I mean by that is, if you're looking to grow your portfolio, which we all should be looking for growth at this point, especially with inflation up at 8, 9%, right, per year, we can't really sit on the sideline and be in cash. You have to have some level of growth, but we can provide growth with options that also provide protection. So protected growth is the first bucket, and there's different levels, like I mentioned. So you could be in one protected growth strategy that could be, maybe it's very conservative and there's really no downside risk at all, right? And you get maybe 45 to 65% of whatever the S&P 500 does, right? So that means the market goes down, well, your account's going to be flat over a period of time. But if the market goes up, you'll get 45, maybe 55, 65% of that. So we've created some of these strategies that are designed to be conservative and protective in nature. But again, if the market goes up, you need that growth in your portfolio, and that should give you that. Um, on the other side, and this is something you'll hear me talk about a lot, and you mentioned this is our dividend, our enhanced dividend strategy called Dividend Plus. Income is the story for 2023 and 2024, and we really think the next couple of years. So um, we have different strategies that are based around alternative income or enhanced income. So that's the other line is alternative income is kind of be the title there of this second column. And here we're looking for alternative strategies where we sell options that generate income. We have a strategy called Hypos that's designed around making money in any market, whether the market goes up this year or down this year, or it's flat, right? We're trying to make money in that strategy. Our Hypos conservative strategy actually has never had a down year and is up year to date, right? So we're coming into December. The S&P 500 is down about 18% on the year. Our Hypos conservative strategy is up about 3.5%, 4% this year. So again, that's a strategy that's designed to make money regardless of what happens to the market. And then the other big one, which is we just launched this year, is really an enhanced dividend model that we call Dividend Plus. And in this one, we're looking for blue chip dividend stocks, right? These are companies that your clients are going to know. Maybe you have them already in your portfolio somewhere. Might be a Verizon Wireless or a Walgreens or an IBM. Companies that have been around for a long time that pay good dividends, right? So we're looking for companies that pay a 4% dividend or higher. And then we do what's called some options work or some covered calls over the top of these dividend stocks to enhance the dividend. So really what we're doing is we're taking a 4% dividend stock and we're turning it into an 8 or 9% dividend stock. So those are really the two avenues that we look at, is protected growth, right, or alternative income. We think those are going to be two places that are going to work out really nicely for the next 3 to 5 years in most portfolios.
Mhm. Yes, I definitely agree. So another thing just for clients or investors to know is these strategies have different structures in terms of where they sit in an investment portfolio. A separately managed account, or SMA as we call it, versus a regular brokerage account. There's also some strategies that work well for an IRA, although Charles Schwab, where I custody with Lion's Eye Wealth, maybe soon some of your strategies will be more broadly available in the IRA. So I wonder if you could just talk a little bit about structure and where the different strategies need to sit.
Yeah, so we work mostly, the majority of our strategies are through what's called an SMA format.
Mhm.
What that stands for is a separately managed account. And what that means is that if you're going to use one of our strategies, whether it's alternative income or protected growth, we would actually need to open a separate account, right? So if you had a $500,000 portfolio and you were going to use $200,000 in one of our strategies, right, we'd open a second account or a separately managed account for this particular strategy. So there's a couple different formats, right? SMAs is one of them. ETFs is another way that we do. We actually have one ETF. We launched two more recently, Lisa, where we're the trading partners on. I'll get you some updated information on that, but some alternative income stuff again. So an ETF, right? We can put that in your main account. So, you might have, 10, 15, 20 separate ETFs. But if you're going to use one of ZEGA strategies, we might have to open a second account for that. So it all really just depends on what's appropriate, right? And we rely on the advisor. In this case, we rely on you, Lisa, to help that client determine what is appropriate, right? If maybe SMAs are better for one client, maybe they're better, ETFs are better for another client. So, we rely on you to help your clients to figure out what's appropriate. There's no wrong answer here or right answer. It all just depends on what a client needs, what kind of service at that time. So we have a couple different ways to invest with us.
Yeah, that's great, and definitely is my job to help explain to clients, which is best. Uh, we also, with ZEGA, there are some account minimums, and just a question, any special accredited investor, QP? I know the answer to this, but just for the audience so they can be aware.
Yeah, so this is something that we're actually very proud of as a firm. Um, we operate in all different capacities. Like I mentioned, protected growth, alternative income, and we even have some hedge fund type approaches that can be very aggressive. We've taken the qualified investor or the high net worth individual, and we've been able to make these strategies available really to anybody. So our minimums range anywhere from $50,000 up to about $250,000 and anywhere in between. So we're really proud of that. We think that we give even a smaller investor a much more sophisticated portfolio. So, we do work with a lot of qualified investors and high net worth individuals, but we have plenty of clients, right, that maybe only have 100 or $150,000 with us. So, and everything in between. We're really proud of that. We think we can help any level of client.
Mhm. Absolutely. Well, thank you for that. I wonder too if you could maybe go into the market and economic perspective that Zega has, closing out 2022, going into 2023. You touched on that, and that these strategies you think really have a good place for the next 3 to 5 years, which is the dialogue I've been having with my clients. But I'd love to know, just your outlook, or speak from the firm's vantage
Sure.
point about, especially going into 2023, before we got on this conference. I mentioned that I've experienced a little bit of clients being frozen and making a decision. And I think that maybe the more we talk about the market, where we are and what the opportunities are, hopefully we can establish more, as one of my clients says, comfortability about the market, and how, like in this case, how these strategies could fit in.
Yeah, so the 2023 market outlook, there's a lot of different views out there right now. I'll kind of give you both sides of it. From a more conservative standpoint, there's if we were concerned about interest rates going higher. You're starting to see layoffs across the tech industry, right? And I know you're out on the close to the West Coast, so you're starting to see that more and more, right? Amazon just had let 10,000 employees go, Facebook, Twitter, right? So there's definitely some concerns about kind of the market slowing. Um, Now, on a positive standpoint, is we're coming into the third year of a presidential cycle, and what the data tells us historically is it really doesn't matter uh, who's the president, who wins the House, or who wins the Senate, or which side of the aisle you're on. The third year of presidential cycles are usually positive for the market. Actually, 90.5% of the time, the market's actually positive in a third year presidential cycle. So you have both sides, right? There's some people that are nervous and some people that are, positive about it. The other thing that I like to look at specifically is the growth and value market. We've seen a very high growth rate over the past really 12, 13 years. And it was very easy to go out and buy Amazon and Google and Apple and Facebook, and you probably did pretty well, right? Those tech companies are in the growth category of the market, and they did particularly well. Well, you're kind of starting to see a shift in that. And as the economy starts to slow and kind of find its new footing, um, you're seeing that more of the traditional names are doing well. I mentioned Verizon Wireless before. I mentioned Walgreens, IBM, things like that. Now, think about it. If we go into a recession, you know, people might even not pay their mortgage, but you know what I'm pretty sure they are going to pay? Their cell phone bills, right? They're going to pay their Verizon bill or their AT&T bill. They're still going to need to go to Walgreens and fill their prescriptions and, grab a six pack of soda before they head out, right? So there's certain companies, whether you're aggressive and you think the market's going to go up, or you're a little concerned and think the market's going to go down, there's certain companies you can invest in, and that's kind of what our dividend strategy does. Is we look for some of those companies that are going to do particularly well in any market. And I think that the concerns are real out there about, having a big down year, but where are you going to go with this inflationary environment, right? Inflation, again, I mentioned this earlier, is up about 8-9% year to date. You have to have your money working for you to grow. And if you put it in treasuries, right? Even treasuries right now, it's pretty good. They're yielding about 4%, but you're getting 4% in a treasury, but inflation's 9%, right? So net, you're actually losing 5% a year. So you really still need to put your money to work. Being on the sideline is not really somewhere you want to be. If you look back historically, uh, during these inflationary times, the best place to be invested is actually dividend paying stocks and alternative income strategies. So even though it feels uncomfortable and we're not sure what's going to happen over the next 12 to 18 months, really 24 months, you still want to stay invested. You want to find good solutions that are navigating this market, can kind of make money in any environment. And so that's really what we're trying to do here with some of our alternative income strategies is we're focused on income generation. So if the market's choppy or it's slightly down or slightly up next year, doesn't matter. You're still going to get the income that the portfolio produces. So look for income as we go into 2023 and 2024.
Yeah, so look for income. Yeah, I was going to ask you what a big prediction or something you're excited about into 2023 is, and I think that answers that question. I also just wanted to mention for the audience that on Zega's website, in preparing for this interview, they have a really neat retirement calculator, normally for advisors. But if you ever want to just have some fun with that and look at it, advisors can help you with this. I can help you with this. But if you're interested, there's that resource and a lot of education on the website. So, Mike, I also wonder, I mean, you guys put out quite a bit of information, podcasts and whatnot. And, if an investor's looking to learn more about options and the strategies, what are the resources that you have?
Sure. So a lot of our information is advisor focused. So if you're a client and you go to our website and you're a little confused, don't be too worried. Right? We're kind of gearing everything towards advisors like Lisa. So, but you're absolutely right. We do have a retirement planning calculator there. If you like to go on and kind of change some numbers, and it's great. It's a free tool that people can use. We call it the growth rate simulator if you're on ZEGAFinancial.com. We also have a podcast with Derek Moore called The Broken Pie Chart, where we probably do 2 or 3 podcasts a week. So we're pretty active there. And we do a lot of CNBC and Fox Business spots, as well as other publications. So we actually had one in the CBOE recently where Derek wrote for, who's on our investment committee, and Jay is on CNBC and Fox Business quite a bit. So, we're in the public eye a good amount. We do a lot of podcasts. We try to provide a lot of support for advisors as well. But yeah, we have some great tools on our website, and feel free to reach out to Lisa as well, and connect with me. If we ever want to do a client call, or you want to say, hey, I want to talk to that guy Mike and talk through some of the strategies. I know, Lisa, we've told you this, I'm more than happy to jump on with clients and talk through details.
Absolutely. Well, thank you so much, Mike, for being on today. Is there anything else in closing you'd like to add?
I think, looking to 2023, I think the last thing I'll add is I know that things can be somewhat concerning around the market. The political environment is kind of heating up as well too, right? As we finally finish the elections here. But I think the number one takeaway that I'd like to pass on to your viewers is just, you got to get invested in the market, right? And I know it can feel uncomfortable, and this year and maybe even next year can feel uncomfortable. And there's a lot of analysts calling for a recession, but that doesn't mean you should wait, right? We don't know when the market's going to turn around and have that big 20% year. Maybe it's next year, maybe it's not for a few years, but getting invested and staying invested is very important for your portfolios, especially in this high inflationary environment. So, connect with your financial advisor, in this case, Lisa. She'll help you determine what's the right portfolio for you and if Zega is a good fit and kind of fits in and where we fit into that portfolio. So, stay invested, I think, is my takeaway.
Yeah, I echo that. Stay invested, because just look at the inflation rate and consider that cash on the side is losing to the tune of that inflation rate if you're not invested. So thanks, Mike, so much for being on today. And since we are uh, December 7th, just thinking about Pearl Harbor and wishing everybody the best for the holiday season.
Absolutely. Thanks for having me, Lisa. Have a
Okay,
great one.
thank you.